I actually quit high school and I worked in the rock and roll business for 10 years.
Yeah.
You know, if I was managing the Eagles or something, I'm sure I would have been intellectually challenged, you know what I mean?
Yeah.
But I wasn't. And I'd always been interested in financial markets.
Welcome to Real Talk, where real people offer their stories to help you learn from their success. I'm Faisal Karmali. Join us for this week's conversation. Welcome to Real Talk with Faisal Karmali, and one of our episodes we're going to have today is the money business, financial planning, more importantly, money management. And here is where we get to talk to one of the best money managers in this country, and I want to know his story and I want to share it with you. Many of you have told me I want to get in the money management business. Some of you are already in the money management business. So what do? How do you do it? What's the secret sauce, if there is any out there? We got to bring the experts in. So we've got Andrew McCreath, CEO and co-founder of Forge First. Andrew, welcome.
Pleasure to be here, Faisal.
All right. So what I want to do in this segment is kind of get into the conversation of your story, how you got to be in the spot that you are. You're a well-known individual. You're on BNN. You're getting a lot of attention. A lot of buzz has happened about your funds and so forth. And I want to kind of walk through what's really happened and get to the person, not just the economics and the investment. So let's start off with that. What's your story?
Well, I come from a generation where you went to business school, you worked at Procter & Gamble in marketing for 2 years, and then you transitioned into the investment business,
Okay.
The buy side or the sell side. The sell side being the investment dealers, the brokers, the buy side being the money managers, the mutual fund companies, the pension funds, things like that. My route was not exactly like that.
Okay.
I was born and brought up in Toronto, and I had a rough childhood. And I actually quit high school. I got involved in the music business. And I worked in the rock and roll business for 10 years.
Yeah.
And I started out as a disc jockey. Got involved in being one of 4 organizers of a 3-day rock festival. That, of course, was the real kernel
Okay.
for my desire to be an entrepreneur. So after we had a very successful 3-day rock festival, 35,000 paying customers, I made some money, put my own concerts on, lost that money.
Okay.
So then I moved back to Toronto and I became a junior agent at a place called The Agency. And the agency had a reciprocal arrangement with an agency out of Vancouver, Sam Feldman and Bruce Allen. And as a result, we represented each other's acts east and west of Thunder Bay, Ontario. Okay. So we represented all the recording acts in the country back then. I always remember one day I was covering the high schools and the college pubs and things like that. And
Okay.
I got told to find a Tuesday night date in a high school for a band. They're coming from British Columbia and they need a date. I got to find them a date. So trying to find a high school that wanted to book a band on a Tuesday night was very difficult to do.
Yeah.
I ended up finding one.
Okay.
A lot of work. Then about 4 days before, I'm working the phones at 7 o'clock at night because that was my gig,
Yeah.
right? I picked up the phone. It's Bruce Allen on the line. I'm canceling the gig. Oh, great. The song just hit the airwaves. It was Turn Me Loose by Loverboy.
There you go.
And they were on their way down to Toronto. And so I remember seeing the first Loverboy gig in Toronto at a bar.
Nice.
Same thing with Bryan Adams, actually. Anyway, while I had buddies of mine in the business that, represented Honeymoon Suite or the band that became the Tragically Hip, I hadn't found a Tragically Hip to manage. And so I was getting a little, intrinsically bored. And so I wrote the securities course.
Okay.
Because I'd always been intrigued by the stock market ever since I had bought my first 10 shares of Crush International, which was a public company at a point in time, Orange Crush.
Yeah, I do remember that.
I think Procter & Gamble ultimately bought it out.
Bought them out.
Anyway, I got an interview in what back then was called the Human Resource Department of an investment dealer. And I always remember the fellow said to me, it's a bear market, son. Why don't you go back to school?
Yeah.
So I continued to work in the music business, got the money to be able to go to university as a mature student, got a couple of degrees, got my CFA, and now I've been in the investment business for a long time.
Okay, you make that sound so easy. Let's back up a bit. You got a couple of degrees as a mature student, and you got your CFA. Let's give credit where credit is due. Not everybody can do the CFA. In fact, they've got a very high fail rate to do these 3 levels of the CFA. So
right, and I'm glad I did the CFA the better part of 30 years ago, because I can only imagine what the derivatives part of the course is like today.
Yeah, absolutely. It's so. Walk me through that piece in your life. Like, how hard was it to go from a different industry back into university? You've been you've been away from the education system for a while, to just you brushed over very nicely when you said, I got a couple of degrees and I did my CFA. What was going through your mind at that time when you're trying to handle both things, financially taking care of yourself, going to school, having this vision of what you want to do in the future, but also knowing that you can still make some money doing some gigs and being an agent. So how did you balance those things out?
Well, let's face it, you have extrinsic goals and intrinsic goals. And intrinsically, I just was not satisfied with what I was doing in the investment business. Frankly, because of the level I was dealing with. If I was managing the Eagles or something, I'm sure I would have been intellectually challenged, you know what I mean?
Yeah.
But I wasn't. And I'd always been interested in financial markets, even though none of my family were involved in financial markets. And, I heard that fellow. He said, don't you know it's a bear market, son? Go back to school. So I ultimately went back to school, and I went to York University in Toronto, where you had to do 2 years of general arts studies before you applied to business school. And I remember one of the courses I took was a humanities course called Ideas of Irrationality. And it was, reading book by William James, Nietzsche, stuff that was just mind expanding to me at the time. But I had to work really, really hard. I would go to the lectures, I would tape the lectures so that I could listen to the lecture, and then I'd go to the library and I'd listen to the lectures on tape and take notes. And then, of course, I'd study my notes. And I effectively got A+ and went to business school, finished a finance degree. And I had an opportunity to do an MBA in 1 year if I stayed at York. And I had ants in my pants by that point in time. I wanted to get out and work, but I realized, if I can do an MBA in economics, was my major, I probably should do it. And it was the right thing. Although then when I got my first job in the investment business, I did the CFA, or the 3-year study of the CFA.
Yeah.
And the CFA was a lot harder than the MBA.
For sure.
A lot harder. But there's a big difference today versus then.
Yeah.
It's got to do with demographics.
Sure.
And the supply and demand of people wanting to work in the investment business was very different than it is today. If I fast forward to today, at Forge First, we hired another analyst about 4 or 5 months ago for our investment team.
Yeah.
And I used a recruitment agency, or a headhunter, as we like to call them, right?
Yeah.
And I was introduced to many people. 5 of the individuals I was introduced to struck me from the perspective that they were either from India, Persia, or the Middle East.
Okay.
And their story was very similar. They had an engineering degree from home. Then they had moved over to the United States, specifically New York, to study a master's in some type of finance, whether it's a master's in finance, like an MBA, whether it was a master's in financial engineering.
Yeah.
But then late last spring, as they were coming towards the end of the school year, each of them told me they were told, don't even think of staying here. You won't get a green card. You might as well leave the country. Trump's immigration policy.
Yeah.
And given a city like Toronto had more than half of the population of Toronto was not born in Canada, they probably had some friends or family here. And our great country, Canada, benefited from having 5 really smart people, well-educated people that want to make a difference, move to Canada.
Yeah.
So they moved to Canada, but now it's a very different time in the financial services industry. Be it technology, we hear a lot about quantitative trading, algorithmic trading, computer-driven trading, let's call it, and consequently, the institutional equity desks don't get paid commissions anymore. Correct. Because it's not that the guy or gal who's managing the fund decides to use a computer to trade. The computer's making the decision.
Correct.
Right? And so there's fewer portfolio managers, there's fewer traders, there's fewer commissions to go around, and so consequently, there's fewer seats available.
So let me make the parallel on this one, Andrew. Business owners generally in every industry are experiencing similar things.
Mm-hmm.
They are experiencing individuals outside of this country coming in may have the same or more experience and education to fill some of these jobs. We also see that there is technology coming in that may be replacing humans in this. How does a business, you're running a business at the end of the day, you're an entrepreneur. How do you cope with that stuff? Like, how do you deal with that? There's small, medium-sized businesses, less than 100 employees out in this province, and they're experiencing in their industry the same thing that you have in yours. So how do you deal with those curveballs that come your way?
I don't think quantitative investing or computer investing can outsmart fundamental analysis 9 times out of 10. Technological change will not impact how we conduct our affairs. However, to a younger person that wants to get into the investment business, they have to be technologically literate. Yeah. They have to be. When I talk to executives of companies, public companies, the one area that everybody needs, people in technology.
Yeah.
I recently spoke with the chief executive of a financial services, a publicly traded financial services company, multi-billion-dollar, and he was, all my job openings are programmers.
Yeah.
It's all technology.
Absolutely.
And so I would urge younger people to make sure they're technologically literate. And look where the jobs are going to be 2-3 years from now.
Yeah.
Jobs are going to be a real problem for our society. The world is changing. And I think young people have to be focused on being technologically literate. And frankly, I think the jobs are really in the tech sector much more than they are in the financial services sector.
You do great work looking at publicly traded companies. I want to spend a couple of minutes on private companies. Mm-hmm. I call it the backbone of Canada. If we've got small, medium-sized businesses growing, hiring more people, we're going to prosper in this country. It's going to happen. When they start to contract, when they're not hiring people, when they're not keeping up with the change, there's a bigger problem. In your opinion, do you think business owners generally in this country are ready for the changes that are happening from a technology perspective, demographics? I think we're not aggressive enough in this country. I think we're very passive, or risk adverse is a better word to use. I think there's a lot of stuff that business owners can do to take our country to the next level. I just don't see it when I talk to individual business owners. What are your thoughts when it comes to how well are private businesses working in the change that's happening demographically and technology-based?
Well, I think you and I are two examples of service professionals that understand to keep clients happy. Your best client is your existing client.
Yeah.
All touch points have to be top drawer, first class.
Yep.
However, not enough Canadian companies understand that. Let's face it, we deal with Canadian companies and we deal with US companies in our everyday lives.
Yep.
The American companies want your business. The Canadian companies, it's like they expect your business.
Really?
That's what I unfortunately find too much.
Okay.
And I think that business owners have to understand that there's an alternative. There's very few people that, there's very few companies where I have to use you.
Yeah.
I've got a choice most of the time. So point number one, it's all about service. And I find that not enough Canadian companies chin up to ensure the level of service that will ensure that I go back to them.
Client loyalty.
Point number two, investment. Let's face it, there's a lot of uncertainty in Canada right now. There's a lot of uncertainty globally related to politics in the United States.
Have we ever, as a nation, business owners specifically, been more riskier? Like, I've always seen when the numbers come out, Canadian companies do not deploy capital at a faster rate, at a more riskier rate than our American counterparts or other countries around the world that are growing.
Well, culture starts at the top.
Yeah.
I try and set a good example for my teammates at Forge First.
Yeah.
Some of them might quibble with this comment, but I think I work harder than any of them. And culture starts at the top.
Yeah.
And then secondly, with respect to willingness to take risk, I think if we go back into the mid-'70s when René Lévesque was Premier of Quebec and there was a growing threat of separation, I think that generated a lot of uncertainty, and executives don't like uncertainty. But you have to create your own opportunity. There's no sense of entitlement in the way I think, or I know the way you think.
Yeah.
Unfortunately, a lot of younger people have a sense of entitlement, but those younger people are now going to have to compete against a growing population of people from other parts of the world that I think we need to embrace in our country. We need a bigger population in this country. But they have no sense of entitlement. They will work very, very hard. And so younger people, of Canada have to be willing to really dig deep and work very hard and set an example that they're willing to take risk as opposed to just having an opportunity come to them.
What can we give advice to business owners to help them going forward? What can they control? What should they be learning from all these different companies and what they've done?
If you're running your own business, somebody has to finance that business.
Yeah.
And there's a cost of financing that business. In the energy business, it's quite clear that a lot of the traditional financial institutions that have financed the energy business, frankly, don't want to be in that business.
Correct.
And therefore, that means you have to use alternative forms of financing or equity to finance your business.
Would that be something you'd suggest to small and medium-sized businesses that are private? They should be looking at alternatives because some of these banks don't want to lend to them either. And especially in this province in Alberta,
Right.
where it's an economic slowdown, I would not be surprised if financial institutions say, you know what, our portfolio in Alberta is too high as it is. It's too much risk there. Let's pare it back. So these businesses who may be able to expand, may be able to seek other markets, need capital. Do you think it's now going into more of an alternative way versus conventional financial institution?
Oh, it definitely has gone that route. But if you're left with equity, then, of course, that's the highest cost of capital that there is out there.
Yeah.
9 times out of 10.
Yeah.
And a lot of it is coming out of the entrepreneur's pocket.
Yeah.
And so the way to reduce the cost of that equity is to get somebody to pay a higher multiple for your business. And if you deliver the goods and you get comfort that I stick to my discipline, then you're probably going to be more willing to pay 15 times earnings for each dollar of profit than 10 times earnings for each dollar of profit. And consequently, my cost of equity has gone down by 50%.
Yeah.
Because the inverse of the price earnings multiple is a proxy for the cost of equity.
Earnings yield, yeah.
And so 10 versus 15 is, call it 10 down to 6 on a percentage basis.
Yeah.
And so developing a business model where all your service touch points are first class increases the odds that you can generate greater revenue growth. And from that greater revenue growth, you reinvest a portion of that cash flow into improving your service offering and improving the breadth and depth of your product or service line. And then the other little bit of it, you keep a clean balance sheet with it.
There you go.
And it gives you greater flexibility, it provides a greater certainty to your stakeholders, and it lowers your cost of capital, which is what it's all about.
That's some great advice. What's in store now over the next 5 years for Forge First?
We look forward to profitably growing our business for all stakeholders.
Yeah.
We think our solution is very timely, given that it's highly probable we are in the late stages of an economic and financial cycle.
Yeah.
What I mean by that is the days of the market going up 20% a year for the next 5 years, I think are over.
Okay.
And they're over because debt and demographics imply lower rates of growth,
Yep.
which in turn implies lower rates of growth in profits. And consequently, the only way that the market can go up a lot if profits are not going to grow at an above average rate, is for that multiple to expand.
Yeah.
On a forward basis, the multiple's already trading at 17.5 to 18 times earnings.
So already
It's
fully
not
valued.
it's not ridiculously expensive, but it sure as heck isn't cheap.
Yeah.
And so I think that investors have to focus much more on risk-adjusted returns as opposed to just returns.
Yeah.
And that plays right into our solution as part of a broader solution that you provide your clients.
Yeah. So when you start looking at the biggest risk to private business in this country, what's the one thing that every business owner needs to be ready for?
Access to capital.
There you go.
Access to capital. Little question about that. We've talked about the energy patch a little bit and the access to capital, but it's all over the place.
Yeah.
We have historically not been a risk-taking country. I think you can take it right back to Confederation. The folks that started Canada with the business interests of Britain, they moved over here. They set up non-tariff barriers. They were the government. They took care of themselves. Whereas America was started by a bunch of folks that get kicked out of Britain.
Correct.
And so they were willing to be entrepreneurs and take risk.
Yep.
And now you advance the clock by, 150 years, and we've learned to be coddled a little bit. And that's one of the reasons why I think too much of Canadian business takes the view that, your business is always going to come to me.
Yeah.
They take you for granted. And now you've got the Amazons of the world that are just nipping at the buds at these Canadian companies that just take business as too much for granted.
Andrew, I want to thank you for joining me today.
Pleasure.
Want to help your business prosper? Click subscribe for more videos.